You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back. It is Thursday. It is 1:30 p.m. Central. It is 2:30 p.m. Eastern. Do you know what's popping off in the world of futures options? Well, let's find out together, shall we? You tuned into the right show. Welcome to This Week in Futures Options. My name, of course, Mark Longo from the THEOptionsinsider.com, as well as, of course, from the network upon which so many people are mainlining these days. Remember, you like what you hear, this show, anything else that we do out there, leave a rating, a star, a comment, a review. All that does help. A lot of new firms joining the network these days. If you like what you hear from any of the firms that support our content, it could be CME and the other firms out there. If you like what they're doing out there, let them know. Let them know that you hear them on the network and that you like what they're doing, because that's a great way to keep this massive fire hose of free content that's been coming at you for 17 plus years. That's a great way to keep it going. Keep the sponsors happy. Let them know that, hey, they're reaching you out there and that you like what they're talking about out there on the old network. And of course, if you want more, you want to go beyond just the network itself. You want to say, I don't know, get some awesome pro Q&A sessions like we just did yesterday with a frequent guest on this show, Mr. Rich Excel, tackling all your questions, just about every category under the sun. I think we talked FX, we talked vol, we talked India and the rupee. I mean, you name it. We went all over the place on that Q&A. Well, I should say you folks went all over because it was driven by your questions. Awesome stuff. You can check that out, as well as all the future pro Q&As, as well as options oddities coming up after Vol Views tomorrow, as well as awesome giveaways. Just gave away the March Pro Trading Crate last week. All that stuff can be found. theoptionsinsider.com/pro is the place to go to learn more about all that fun as we learn who's joining us today in the old CME Group hot seat. I am pleased to welcome back our old friend, Mr. Scott Bauer from Prosper Trading Academy. Scott, welcome back to TWIFO, sir.
It is awesome to be here. How you doing?
I am doing well. How are things in the land of Prosper? Are we prospering, sir?
We are. It's been actually a fairly slow week overall because waiting for some eco data, but overall trade has been you're a trader in this market. You're getting some moves. That's what you want.
What would you say is the hot thing? What are the folks coming to you for right now? Is it 0-day equities? Is it crazy nat gas? Or what are they up to?
Well, it's always 0 day. I mean, that is just, the hot button of the day. On the equity side, NVIDIA, but, looking straight at futures, there's been a lot of people saying oil's going to 90, 95. I personally have been fading it. That has been really hot. And then copper also. Copper's been screaming. So we're seeing lots of activity there.
Ah, yes. NVIDIA. I was wondering on Monday who came in and bought 5,000 of the 1,500 calls expiring tomorrow. I guess it was you, sir. That was you. Now the mystery is solved. They paid a penny for those, if you're wondering.
Yeah, there you go. That was probably covering some margin risk, I would bet.
You'd think, but the weird thing is, I don't want to get down a rabbit hole this again, but they could have bought the 1,200s for a penny if they wanted as well. So
it doesn't make sense.
It's insane on every level out there, but that's why we like talking about it. It is kind of fun. And you're right, copper, we talked about it last week. It is surprising how much that metal has really become an option story. When we first started doing this show, wasn't really a big option story. These days, as you mentioned, it is screaming. Let's see what else is screaming, though, listeners. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we tell you what's lighting it up to the light side and to the dark side here. And listeners, it's another one of those weeks. If you can check out the chart, you follow us on Twitter or CME on Twitter. We'll tweet it out right before the show. You would see that it's pretty much another close to 50-50 week, maybe 55-45 in one direction or the other. We got one big mover to the upside, but I'll explain that, I think, in a little bit out there. But other than that, it's pretty much 50-50 light side versus dark side, at least from an underlying perspective. Mr. Scott, where should we begin our journey this week?
Let's stay optimistic here. Let's start on the light side.
All right, you know what, Scott? I've been letting our guests have fun with this segment going forward, so I'm tired of reading all this stuff. I'll let you do it. How does that sound? Why don't you read off to our listeners our top 5 for the light side this week, sir?
Yeah, let's do it. So Natty Gas is in the lead. Actually, we want to go the other way, right? I already messed this up. We want to go 5
You probably want to start from the bottom to build tension, but hey, you do it your way.
Let's do it. Silver, which a couple days ago was actually a bit higher, but silver was number 1 on the light side last week, up over 9%. It's up about, now with the gain today, just shy of 4%. This week. So that, the metals have just been on fire. And moving to number 4, staying in the metal space there, we've got platinum up almost 4% again. That was number 4 on the light side last week, up 3.5%. Number 3, SOFR. It's up 4% again. So we've got, from 3 to 5 there. We've got all kind of scrunched together, up 4%. Rough rice. Have you ever had rough rice?
I find it a little bit too rough for my system, sir.
Yeah, I'm with you on that one. That's up over 4%. And then as you started at the top of the show with Natty Gas, what had been the proverbial widowmaker for such a long time, Natty Gas up over 30%.
Now, people might be surprised. I know I was surprised by that number when I saw that. So I went and did a little bit of digging to see maybe is there a bit of an aberration with our data. And what it looks like is last week it was keying off the May future, which is around a 176. Correct. And now we have just rolled. It's going out to actually July. The July future is at a 232. So that will show as a result a 30% roughly swing moving from one future to the next, even though the underlying price at a front future at a 176 hasn't really evolved that much from last week.
If we look at that front future, it was up. It was up as high as 190. It's back to unchanged around 176. But, that 30% sounds good, doesn't it?
Sounds pretty crazy. So it certainly could sink our teeth into a little bit of nat gas today. But before we do that, sir, you think you got a little bit of dark side in you, or is that too much? Have I gone too far?
Yeah, I think I can handle it today. It's almost the weekend. Number 5 on the dark side, the 30-year, even with that bond auction today, down 2.5%. Heating oil, which was number 5 on the light side last week, which was up over 3% last week. That's down over 2.5% this week. Soybean oil down almost 3% in the number 3 spot. The ultra 30-year, which was also on the dark side list last week, that's down over 3%. And number 1 on the dark side, lumber, down almost 6%.
All right, a lot to unpack there as we keep on rolling. I'll give you a break now, Scott. We'll move on to the CVOL movers and shakers. You can find these for yourselves, listeners. You just type CME and CVOL into your browser, and you could see this. I'm not sure if you could sort them by rank out there. I'm not sure if they allow that on the free tool out there, but either way, we'll do that for you here, listeners. We'll start to the dark side for a little bit of fun. Let's go number 5 to the dark side this week, kicking things off in energy. It is heating oil, off about 1/3 of a point, trading at about 30.60 right now. Again, that is the CVOL for heating oil. So it's taking kind of a VIX-like calculation there. So it's not just straight 30-day at the money front month. A little more going on there, a little bit more skew being cooked in there as well. Coming out at a 30.60, off about 1/3 of a point. All right, behind it, number 4, we have Chicago wheat at almost a 32, 31.92, off about 0.7 on the week. Number 3 to the dark side, we have our old friend aluminum. Don't talk about that one too often. The Brits love it. 20.6, off about 0.8 on the week. Number 2 to the dark side, our old friend Nat Gas. We were just talking about it at about a 58.10, off about 1.1 points on the week. So still pretty frothy from a vol perspective. Going to be higher than most of the things we're going to talk about, except for one. You'll see it in a second on the light side. And then our number 1 dark side vol mover this week, going back to the ags, in particular dairy. It's class 3 milk at a 20 even, 20 exactly, off 2 points. I'm not a percent of % guy, but 10%. That's a big move. I know some of our vol heads will go crazy when they hear that, but nonetheless, 2 points when you're coming in at a 20 handle already. That's a big vol move out there in class 3 milk. Might have to sink our teeth into that and see what is driving that. To the light side we go now, listeners. Platinum keeping it in the metals yet again. It was all metals last week, and platinum coming in at number 5 to the light side this week. 25.44, up almost 0.9, so almost a full vol point on the week. Number 4, off to the rates. It's the 30-year. Remember, this is price volatility. We switched it off of yield volatility. A lot of people found that a little bit too obtuse for their liking, trying to figure out the yield volatility. This is more straightforward price volatility, also puts it in line with pretty much everything else we're talking about here, which is all price volatility. It was strange to have the outlier of yield vol for the rates, so we switched it this way. I think a lot of you find that a little bit easier now. A 30-year, almost 13.5, 13.47, up about 1.8 points. That's a big move for a 30-year vol. Again, treasuries not known to be bastions of volatility out there. Number 3, back to FX. It's the yen USD. This has been on our list a couple of weeks now, post all this action going on over there at the Central Bank of Japan. 11.33 is the CVOL in the yen, up about 2.15 points. Number 2, back to energy. It is WTI, 33.06, up almost 2.5, about 2.46 points. So catching a little bit of a lift on the vol side out there in WTI. Obviously, all this unrest out there in the Middle East going to contribute to a little bit more vol ticking up out there on the WTI and across the board in a lot of these energy products we're talking about out here. And then the number 1 vol light side mover this week, listeners, 3-month SOFR. Again, it's kind of mirrors what it replaced, which is Eurodollars, which is one of the few products that really showed a fair amount of vol in the rates complex. In fact, coming into the start of the show, this was at 100 almost exactly. 100.07 to be precise. Up nearly 8 points, 7.81 points. That is a heck of a lot of vol for any product, let alone 3-month SOFR. Scott, this is kind of a big institutional beast. I'm not sure how relevant it is for a lot of listeners of this show or even for a lot of your clients over there at Prosper, but You have any thoughts on 3-month SOFR and just blowing the doors off from a vol perspective, especially when it comes to the rates complex?
Well, I think that's what it all is about is the dollar disconnect from the euro, from the yen. And you look at what the ECB did today. They kept rates unchanged, but they are still hinting at a June cut. So there is so much volatility because there's a lot of uncertainty about, are they going to be the first ones to cut? It was us up until maybe, a couple weeks ago, until a few of these last data points here. So I think that's why we're seeing this pretty big uptick in volatility here.
Let me ask you that. You mentioned the hotly anticipated, hotly contentious, very contentious June rate cuts. Obviously, some of the numbers this week may be putting a little bit of water on that fire, kind of putting it out a little bit. Looking at the Fed Watch from earlier this week, they were pricing in for the June meeting. It was almost a 60% probability, about a 56, 57% probability of a 25 basis point cut. That has fallen now. It fell all the way down to 16%, a little bit higher today, almost 22%. So getting a little bit of juice back, but still, at least from a Fed Watch perspective, Scott, the market's kind of kicking the June rate cut down the road. What are your thoughts on that? You think we're still going to see some action in June, and also you think we're going to get the 3 everyone's talking about?
Well, I do think we're going to get to 3 because at some point, at least to me, the eco data we're seeing, I think there's such a big disconnect with Main Street versus this eco data that's coming out that it's going to catch up. Now, I don't know if it's going to catch up in the next quarter, by the end of the year. I think that as we get towards the back end of the year, the Fed's going to have to get more aggressive. But for right now, it's not looking real good for a cut in June. When I look at this data, the next big data point is about 2 weeks away. It's PCE, and that's the Fed's quote unquote preferred gauge. That one's going to be a telltale to me. That one will be the straw that broke the camel's back to me. If that one is a hot number, we're going to see that June number down to 0 and maybe even extend out to September. But again, my fear is that all of this strong eco data is going to break because Main Street is not feeling the same way as this data is telling us.
All right, speaking of the data, let's crunch some for ourselves, shall we, listeners, as we kick off our journey in energy.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the wonderful, the topsy-turvy, some might say tumultuous world of energy. Head on into that drop down. You could find, you know where to go, cmegroup.com/TWIFO, TWIFO. Once you're there, listeners, go into that asset class drop down. We're going to go down 3 slots to energy as appropriate. Then we're going to go into the product family. Going to go down 3 more to our vol and indeed underlying mover and shaker this week, which is nat gas, which also, if we did a 3rd column for volume mover and shaker, would also be lighting it up out here this week. Nearly 650,000 contracts on the tape for nat gas. That's roughly 200,000 more than we used to expect this time of the week. Again, nat gas kind of a different beast these days. It's putting up more volume. So maybe we need to raise our expectations across the board. But for a long time on this show, we saw 450 in nat gas. That was a banger week. Now we're at 650 already and obviously going to move beyond that. And we have seen much more. We've seen 1 million contract weeks recently. So a lot going on out here in nat gas. As I pointed out, bit of a dichotomy out here in the term structure. That front future going away in about a day. Still at about a 176. As we go a little bit farther out, we go out to June. We're at about exactly a 2. And then we go out to July, which is what our movers and shakers report is keying off of. It's actually at a 232. So very steep contango in that front portion of that term structure. Scott, what's been catching your eye and lighting up your tape out there in nat gas these days?
You talked about June, and when I look at some of the June options, take a look at the open interest up at $3. That one has stuck out to me. That one's been flashing to me. You talk about a rally. I mean, that would have to be a rally of epic proportion. So when I look at that, I don't know if that is, again, maybe sort of a margin hedge against another position that someone has. But we talked about the NVIDIA 1500 calls earlier. This is not so far away from, kind of the analogy of those. So that one has really stuck out to me, and, that's been out there. But as you said, the volume is really consistent. The volume, there's a lot of interest in there. There's a lot of retail interest in there. Today, there's a lot of volume on the $1.50 puts that are trading today for May expiration. But really, that $3 line in June, that one's standing out.
I'm looking at it right now, sir. 17,600 roughly open on that strike, and adding to that this week, adding about 1,300 contracts.
Yeah.
So you're right. That would be, I don't know if it's NVIDIA 1500, but it's a pretty impressive move. It's up there. I guess those folks looking for a little bit of, I don't know, Ukraine invasion 2.0 kind of pop here in that gas. we're going out here to June, listeners, so you got a little bit of time on the tape here. You've got about 47 days, so it's not like it would happen tomorrow. But still, that future's at about a 2, so you're talking a $1 move, a 50% move in nat gas.
That's a huge move.
Going into the summertime, too, not exactly a seasonally strong period for nat gas. So, yeah, that's a funky one. Speaking of funky, listeners, let's see what else we're seeing out here from an overall funk perspective. It's more than just June 3s, even though they are lighting up the tape out here this week. About 650,000 contracts on the tape. A little over a third of that, 36.3% of that going up in the May contract that has 14 days to go. We'll sink our teeth out there. Let's also talk a little bit of June, because we're going to talk June as well. The May vol right now with about 2 weeks to go at 63.20 actually, up about 4.5 points. You go out to June, which is what we were just talking about, that falls off a bit. It drops to about a 53, actually off about a third of a point. So again, a little bit of a different vol picture depending on where you go here in the term structure. In terms of skew, in May we had not much evolution, quite frankly. 5.6% bid were the puts last week, 5.5% bid this week. The calls literally unched 5.4% cheap both weeks. Going out to June, a little bit different story. The put 6.3% bid. Now they're 5.8% bid, so kind of treading water there. And then on the calls, 3% cheap last week, 2.3% cheap this week. So of all the weeks we've talked nat gas, this isn't the most exciting from a skew evolution perspective. But let's see what's lighting up the tape out here. Maybe we can get a better sense of that, listeners. And it looks like it is going back to June, but it's not the 3 calls. It's the 1/2 puts. Scott was just talking about the 1/2 puts kind of lighting it up in May. They're active there too, but the big dog this week are the June 1/2 puts, trading 53, almost 54,000 times this week, including a boatload, 34, almost 35,000 going up today. Now, worth noting, there's nearly 70,000 contracts open on this strike coming into this morning, so they could clearly be taking roughly half of that off, but still a very active option and strike this week. Almost 13,000 going up yesterday. Looks like mostly closing there. About 5,000 on Monday, slightly opening, and about 1,200 on Tuesday, again, slightly opening. So a little bit of back and forth action. This is the strike we've been talking about for a while, this 1/2 strike. That seems to be where a lot of you kind of bottom out in terms of some of your concerns about nat gas. I mean, there's some 1/4 puts trading here as well. 29, almost 30,000, including 16,000 today. So maybe, I don't know why you would be rolling down on a day like today, but we've seen weirder things. Followed by about 9,000 yesterday, slightly closing there as well. So folks could just be bailing on all these puts as well. We were talking about that recently with Carly Garner too. She's a big nat gas aficionado, and she was talking about how, didn't seem like 1/2 might be kind of a bit of a bridge too far on the put side too, but clearly they're trading it up this week. 1/2 puts also trading in the May expiration cycle as well, to the tune of about 26, almost 27,000 contracts on the tape out there. Let's see how they went up throughout the week there. So roughly half the volume going up in May. And again, today, an active day on the 1/2 puts, 13, almost 14,000 going up today. That's against OI of nearly 60,000 there as well. So there's a ton of OI on these 1/2 puts, which again makes sense. that's a line I know a lot of you were looking to hedge in or kind of draw a line in the sand on. And of course, 2 to the upside, or as Scott was just saying, 3. By the way, the 2 call is also pretty active in May right now, which again makes some sense. That's about 24, almost 25 cents out of the money, going up about 20,000 times this week, the big day. Today, 7,000 today, 6,500 on Tuesday, 3,800 on Monday, about 3,200 on Wednesday. So kind of an interesting smattering of paper, but definitely 1/2 puts leading the dance. I'm just looking, Scott, to see if I see any other interesting upside prints that might be catching your eye out there. I mentioned the 3s trading in June, trading decently actively this week, doing about 4,800 contracts. Not the banger day if you are weak, really. If you want the most active June upside option, you got to go down to the 2 halves, doing about 8,500 contracts, including about 2,800 of that today. So, Scott, not exactly a banger week for the upside, mostly 1/2 puts. Anything surprising or catching your eye out there in that paper this week?
We've got the upside in August. If you look at also the August 3 1/4 calls, August 3 1/2 calls, open interest there, fairly decent as well. So, some people think that the rally is going to continue here, but like you said a few moments ago, we're coming into summer here.
Yeah, there's few products that exhibit as aggressive seasonality as NatGas. Right. Loading up on the 3s for August. I'm looking right now, you're right. There's about 12, almost 13,000 of the 3s open in August. About 10,000 of the 3/4, Scott. So if the 3's not doing it for you, 3/4 open for more size, and about 9,000 of the 3 halves. So, and even 8,500 of the 4s, and 10,000 of the 4 halves, Scott. So, there's
a lot of optimism out there.
There's some legacy paper. 4 halves in August. I don't think I want to know what would take us up. It probably would nothing good. It's taking us up to 4.5
Nothing good
in August. That's for sure. All right, Scott, we dove deep into August. What else is lighting up your tape? Where should we go next on our TWIFO journey for this week?
We talked briefly about CVOL before, and if we want to go there, we can look at CVOL and some of the metals, which is almost, I don't want to say off the charts, but as expensive as it has been in over a year.
All right, to the metals we go, listeners.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, everybody, welcome to the metals. Wherever he is right now, Uncle Mike is smiling. He was just talking about silver on our last show about an hour ago, and he loves whenever we talk the shiny stuff here on the show. And again, in terms of if we had a volume mover and shaker, because obviously metals not making it onto at least gold, your traditionals, gold and silver, platinum making it onto our CVOL mover and shaker this week, but not making it on the others. Platinum again on the light side as well. Platinum, unfortunately, not exactly a banger, about 5. Actually, I take it back. Silver did make it number 5 to the light side. So there is some underlying action out here, but volume-wise, all these products are kind of off the charts. Gold right now, 355,000 contracts on the tape, which if you know anything about gold, a good week, 200, maybe 250,000 of a pretty decent week. So over 300K is certainly nothing to sneeze at out there in gold. And even silver. Silver used to put up 25,000, maybe on a good week, 50,000 contracts, 114,000 right now. So clearly all you folks tuned into our episode last week, which we called All About Metals because it's true. And it seems like it might be doing that again this week. Scott, which metal should we start with this week, sir?
Yeah, let's start right at the top. Let's start with gold.
All right, to the world of gold we go. Listeners, you know how to find this. Go into that drop down, pop out of energy, go into all the way down, almost to the bottom of the list. One from the bottom of the list, 2 metals. Then in the product family, we're going to go precious. Maybe we'll have time to get base later. Scott was talking about copper earlier. And then click on the top there to gold, which, except it's been threatening or hitting new all-time highs seemingly all the time for the last few months. Threatening that again, 2381 in that front future going away in a day as we're kicking off the show. Puts it up 35 handles or about 1.5% just since Monday. So impressive stuff. Scott, what's catching your eye out there in the king of the metals, sir?
Yeah, well, first of all, like we just talked about, the volatility, the CVOL is, like I said, it's at a yearly high here, which tells me that there is still so much speculation and probably not just a little bit, but a lot of FOMO out there. Same with silver, but a lot of FOMO out there. And that's why we're seeing volatility, or, the CVOL so expensive. So, in gold, we don't see typically a lot of volatility, as we know, and the yearly range for CVOL in the gold contract over at CME has been about 10 to 19. We just came off of that 19 level, and we're just trading about 18 right now. That tells me still there's a lot of FOMO out there.
Gold, a very good FOMO product, listeners, if you want to dive into. I'm just pulling up right now to see if we can take a look here on the old CVOL for gold. There it is. Yeah, you said about a 1785 right now on the CVOL. Puts it off about 0.2. But again, vol looking frothy out there. As Scott alluded to, if you know anything about gold, it's not quite the rates, but it is also not exactly a bastion of vol. 14 vol is actually kind of juicy in gold. So coming into the start of this week, looking at the front portion of this term structure, seeing 19s, 18s, 17 and a half, then that's a lot of vol in gold right now. So a lot of action out here. By the way, if you, like I said, 355,000 contracts on the tape, 24% of that going up in the June contract that has about 47 days to go. That's another thing that's refreshing about gold. It's not all 0 day all the time. They actually go out a little bit. That future at about a 2381 as well. And in terms of vol, that one at almost a 17, 1690. Actually, I take it back, almost about a 16, 1590 on the June contract. So vol a little bit calmer as you go a little bit farther out. It's still up 1.12 points on the week. Again, if you go into the contracts that expire in a week, 2 weeks, those are trading at about a 19, 18 vol out there. So gold looking pretty frothy from an overall vol perspective, which again is not something we say very often here on this network. When gold is frothy, it means it's interesting times in the market, listeners. You might want to look out below, maybe keep a little powder dry or a put or two in your back pocket for some unforeseen events. But it's gold, Scott, so something crazy to the upside has to be lighting it up. And that actually is what's taking our top spot. Before I get there, though, I'm kind of burying the lead. Let's go back to the June contract. I mentioned the vol is at about nearly a 16. Let's look at the skew out there as well. The calls are going to be bid. It's a question of how much. Last week, the calls, 8.9% bid. This week, 10% bid. The puts last week, nobody wanted them. 5.4% cheap. This week, even cheaper, 6.7% cheap. So I guess the moral of the story there is if you want some cheap downside protection in gold, it's decently cheap, although you're not paying an overall high vol level to begin with. So it never really was that expensive. But if we go out to June, skew-wise, like we said, 10% bid are the calls right now. And then leading the dance, though, actually, we have to go a little bit farther out, actually. We have to go all the way out to December, taking the top spot ever so slightly in gold. 76, almost 7,700 of the 3,000 calls, Scott. We were just talking about some upside. Gold is known to have a gold bugger to it, and that future, by the way, in DEES, 2439. So however you slice it, the 3,000 strike, bit of a ways to go. 5,078 of these things trading today against an OI of 11,300. So they could be closing, but doesn't appear to be the case. They were opening earlier this week. They opened about 1,300 on Monday, 1,100 yesterday. So someone has been opening throughout the week on these 3,000 calls. About 2,300 of the 2,700s and 3,800 of the 2,900s went up. So there could be a bit of a funky three-way there, culminating in those 3,000. Either way, I don't know. Scott, these 3,000s in gold, does that float your boat, sir?
Wow. Yeah, to sell them. I think, anything can happen, obviously, as we get closer and closer to the election. I think you're looking at some people that are really trying to maybe time a lot of instability. But maybe they're selling, really high vol, high premium options against it, and just want to have that in their back pocket going out. So it is definitely unusual that we would see so much activity and so much open interest, 8-9 months out into the future, especially in gold, but especially at these vol levels. Because as you said, we typically see gold vol, 12, 13, 14, but to see it upwards of 20, wow. That's why I said earlier, I think there's a lot of FOMO out there.
I think we need to have a poll for the people choose the best of bad options. They can buy the NVIDIA 1500s expiring tomorrow. What was it? June 3s in nat gas, or the DEES 3000s in gold. Which of these would you rather throw your money away on?
I think option traders, if they would buy all of those, they call that a call stupid.
Yeah. Or just plain stupid. You can go that way as well. We're hanging out in metals. We talked about silver recently on the show, but Scott, you mentioned something that caught my attention at the top of the show, which is copper. So let's get base next before we roll out of the metals. Let's just have a chance to talk about copper that often. And it is a compelling story in and of itself. 70,000+ contracts on the tape. So again, if we had a volume mover and shaker this week in terms of compared to average volume, copper would certainly be on it this week as well. Again, going back to the early days of this show, copper was doing a few thousand. If you got 20, maybe you've got 30,000 contracts up in copper, that was explosive. Now 70,000+. It just seems like the entire metals complex shifting into another gear from a volume, and certainly as we're seeing from a volatility perspective as well, which again, that certainly is going to attract a few options traders when you got some vol finally out there. Scott, you mentioned copper is kind of on fire for you guys. What's been catching your eye out there of late?
Yeah, again, lots of out of the money call buying, lots of out of the money open interest there, especially if you go out to that June contract. Look at the it's the 420s, the 430s, the 440s. There's some pretty decent size, and then you even go higher up to 450. To me, again, there's some FOMO out there. And this one, of all the commodities, to me, of all the metals that have made a run, this one to me has the biggest potential for a quick drop. My reasoning for that is there's so much of a tailwind recently in copper due to some optimism coming out of China that, okay, the reopening finally is happening and there's going to be, the economy picking up. We've seen this story before. I think we've all been fooled once or 10 times before. So I'm not a buyer into that. I'm not a believer. And I think if we get one data point coming out of China saying, we're not, economy is not accelerating as we had anticipated, we can see a pretty quick dip in copper.
Yeah, you're right. It's kind of hard to divorce copper from all things China. Gold, obviously more of a surrogate, a bellwether for the broad global economy, if you will, but copper very much linked to China out there. And you mentioned the upside in June, 4 halves, about 3,700 of those open, 440s, 2,300, nearly 4,000 of the 430s, and even about 2,000 of the 420s out there. So you're right, a little bit of vestigial upside out there in the June contract. But we mentioned, like I said, a pretty decent amount of paper out here this week, listeners. Over 70,000 contracts in copper. Not many weeks you could say that. And leading the dance out here this week with about 38% of that paper is actually the May contract, going away in about 14 days. So right at that 2-week window, listeners. In terms of vol, again, decently volatile for a metal. I mean, a little bit shy of 21, about a 2080. That's coming in a little bit, about 1.1 points to the downside. So intriguing stuff out there from a vol perspective. Even with the vol coming in, it's still over a 20. You don't see a ton of metals delivering that level of vol. So that could also be attributing to some of this volume out here. Again, at the end of the day, options traders, they just need some volume and some volatility, and one usually begets the other. And we're starting to see some of that paying off here in metals, or excuse me, in copper. In terms of the skew out here, listeners, what are we seeing from a skew perspective out here? The answer is not a heck of a lot of evolution on the put front. 2.3% cheap with the puts last week, 3.2% cheap this week, so getting a little bit cheaper. But it is a metal. If it's going to play like a metal, it's got to have an aggressive call skew, right? And that is the case now. Last week, the calls 4.7% bid. This week, 7.5% bid. So I'm looking here at the rest of the term structure. That isn't the highest, but if you have to go out to June to get about an 8 or even a 9% in July, Looks like we top out in June of next year at nearly a 12, but it's kind of a bit of an aberration. So for the near dated contracts, 7.5% bid in the May contract is leading the dance out there right now. So folks liking themselves a little bit of upside here in copper. That is also reflected, listeners, in the contract that is leading the dance. The 430s doing 4,100, almost 4,200 contracts this week. So again, upside leading the dance. That's against an OI of about 3,900. So it looks like folks are opening, maybe not Tuesday. Looks like they're closing about 1,900 on Tuesday. And then about 1,000 on Monday, almost 1,000 on Wednesday, opening both of those. Only 500 today. So Scott, that gets back to what you were just talking about. Upside leading the dance here in copper. Again, 430s. That future out there is at about a 426. So it's pretty much the at the money contract. It's kind of hard to call that an aggressive out of the money play, but nonetheless leading the dance. And then behind that we have, looks like we fall off a little bit from a volume perspective. Actually, let's go out a little bit farther. We have to go a little bit farther to find the next. We have to go out to June. The June 4 halves going up 3,100 times this week. Again, this is kind of the point Scott was making about the June upside. 31, almost 3,200 of these trading, including 1,100 on Tuesday. Opening there, about 1,000 today against OI of almost 4,000. So they could be taking some off, but it looks like they're opening earlier in the week. So probably opening again. So a lot of opening on the 4 halves. If that's not doing it for you, listeners, how about the 440s also in June, going up 2,800 times? This time, all of that on Tuesday, 2,600 and change on Tuesday, all opening. So somebody liking themselves the 440s on Tuesday to the tune of nearly 3,000. And then splitting the uprights there, you got the 430s, 1,700 of those going up this week. Again, almost all of that on Wednesday, about 1,000 on Wednesday, mostly closing. So interesting stuff there, listeners. Funky upside to be found in most of the metals, and copper is no exception. All right, Scott, we got time for probably one more product before we roll on out of here. What else is catching your eye?
Let's just stay in the metals. Let's look at silver. We got to do it.
All right.
Got to do it because what a run it made. People were anticipating that gold-silver ratio kind of coming in a little bit, which it did. Silver made just an incredible run over the last couple weeks before, calming down just a little bit. But I really want to look at it because once again, you've got, to me, a little bit of FOMO because that CVOL, that volatility out there, it's as high as it's been in a year.
Yeah, silver getting on everybody's radar. Some people have been speculating. Remember back in the meme stock days, Scott, that there was all this talk they were going to be able to squeeze silver higher, right?
Yeah.
And not really understanding the mechanics of the futures market, a little bit different than, let's say, a GameStop. But we have been hearing some speculation. Maybe some of this action is a little bit, shall we say, squeezy in silver. Are you buying what they're selling there, sir?
So I will be honest with you. We were long a few bucks ago, took our profits. It has continued to rally. We're out. I'm looking for a little bit of a reset and then looking for another entry point. I'm not buying into it right now.
Yeah, 28.25 on that front future. So it's kind of easy to see why some folks might want to stay away at these levels. If you don't watch silver, that's a pretty lofty level. Our buddy, Mr. Uncle Mike, likes to say silver comes like a thief in the night. When it does, it brings it. Certainly doing that over the better part of the last month. Also, from a volume perspective, like we said, 114,000 contracts on the tape right now, which for silver is no mean feat. 28% of that going up in the May contract, has about 14 days to go. So we're going to hang out there as well. What is the vol in silver right now? 33 2/3, up about 3 points. So again, that is that kind of goes back to your point, Scott, about how the CVOL, the highest it's been in the year. I'm hard pressed. I think the last time I saw a 33 handle on silver vol, Scott.
Can't remember when that happened. That's for sure. And just to that point, look at the open interest in June. 32 and a half. Up to 35. There's pretty decent big open interest there. So it's been a while since we've seen that.
Yeah, silver waking up with gusto out here, listeners. Like we said, 28% of the paper going up in the May contract of the vol out there, 33 2/3, up 3 points. Again, everyone who's out there wringing their hands about equity vol. Oh, it's so anemic. It's sub 15. I can't get anything done out here. Can't get any juice for my premium harvesting. Allow me to present the metals, in particular silver listeners, for a little bit of said juice. Skew-wise, the puts last week, 3.9% cheap. This week coming in quite a bit, 6.3% cheap. So nobody wants the puts right now, which is interesting. Maybe if you're looking for a little bit of downside spec, the net vol is up, so that's going to cost you, but there's a little bit of discount you can look at for the puts there. The calls last week, 6.5% bid. This week, nearly 11%, 10.8% bid. So that kind of speaks to what Scott was just talking about. Folks can't get enough of the freaking upside out here. Let's go to July, actually, because that's where actually, I take it back. Forget July. Let's go out here to DEES. The DEES 50s, 5-0s. We know people love themselves a little bit of outlandish upside in the metals, and this week is no exception. The DEES 50s, again, that DEES future listeners at about a 29.21. So however you slice it, 50 is a long way to go. These were trading quite a bit, 9,000 times this week. It seems like maybe cooler heads are prevailing, though. It seems like folks were mostly bailing on these. They traded about 3,300 yesterday, 3,000 on Tuesday, 2,200 on Monday. It looks like they were closing pretty much every day. And I don't see any other leg where they're rolling down. So maybe they're just taking their profits, getting the heck out of Dodge. They're saying, you know what, this is about as good as I'm going to get on my DEES 50s. Getting to about the 30 handle, close to it. I'm going to take my profits and get the heck out of Dodge. So long-term upside closing, we don't generally see that in the metals. Folks are just usually gobbling up more upside every week out there. So intriguing stuff. Speaking of more upside, let's go a little bit away from the 50 handle to the 30 handle, which is a little bit more relevant, especially when we're consider our futures hanging out pretty close to that level. It's close to the at the money. We've got the 30s going up here in July, nearly 6,000 times this week. The big day Tuesday, 2,000 on Tuesday, 1,700 on Wednesday, 1,500 on Monday, only 500 today. Opening pretty much all week long. So that kind of gets back to your point, Scott, that folks are liking themselves a little bit more upside here. 30 handle, again, that sounds rich just to say out loud for silver, but not that far away from where our futures are. So it's almost an at-the-money call at this point. Right behind it, the 35s. If you don't like the 30s, listeners, how about the 35s in July? Going up 4,000 times this week. 2,300, almost 2,400 on Monday. And then the rest kind of scattered throughout the week. Looks like mostly opening throughout the week as well. So a lot of OI on the 30s and the 35s. That is in July. Scott was talking about June. Let's go check there really quickly as well. By the way, the June 30 is also pretty active this week, trading 3,300 times on the week. But upside is the name of the game. We've got 34s. There's about 1,000 open there. And we've got 1,700 of the 35s in June and 1,700 of the 30s and about 1,100 of the 33s. So some upside to be found across the board in metals. Is this new level of vol in the metals, listeners, has this started to awaken you to maybe some prospects out there? I'm curious. I know maybe you're not a long-time metals trader, but it's kind of hard to ignore it right now. But you know what, listeners? Speaking of you folks are impossible to ignore. It is time for a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's get to it. Scott, I want to pick your brain on our question of the week as well. We unwittingly opened a hornet's nest on our Options Bootcamp show yesterday, diving into a seemingly innocuous topic. But you know what? You never know what's going to set people off in a good way and also angry as well. You get all of the above with fun stuff like this. Well, we dove into a topic, again, that was seemingly straightforward, kind of discussing this misperception that's out there that options are a zero-sum game. We broke that down. We kind of came down on our Options Bootcamp show like pretty much in agreement that we agreed options are indeed not a zero-sum game. We were all liquidity providers back in the day. We made money on the trade, and the customer can make money on the trade because of the hedging aspect of it. So the notion that one side has to win, the other side has to lose is demonstrably false in the world of options. We had a little bit more contention, surprisingly, on the Delta One side. So stocks and futures got into a little bit of a debate with my co-host. I thought it was a no-brainer that those are a zero-sum game. He debated that a little bit, which I was kind of surprised at. Then we put it out to our audience, who are the ultimate arbiters of all things at the end of the day. And luckily, saner heads prevailed on the stock/futures/Delta One side, which is more than 2/3. In fact, it was higher. It was almost 100%. I think my co-host and some of his cronies bombed this poll at the very last minute to get it down to only 2/3 of you saying yes. But either way, the majority of you agreed with me. Yes, the Delta One stuff is zero-sum. More surprisingly, though, Scott, we have this poll running right now. We have a very options-savvy audience. We asked them, are options a zero-sum game? Just very simply, yes or no. And it's hovering around 50-50 right now, Scott, which surprised the hell out of me. So first off, where do you fall on these two clearly contentious, more contentious than I thought issues? Let's start with the Delta One stuff, the futures and the stocks. Where do you fall on those being a zero-sum game? And then let's get into the hot stuff, the options, sir.
Your life.
So if you're going to look at the option side and use the rationale that the buyer and the seller can both win because of the hedging opportunities, I think you have to take the same approach on the stock or Delta One side, because I might buy a future and that future could go down, but maybe I'm buying that as a hedge against an option position I have. Or maybe I bought it, it's gone down, the person that sold it cashed out and profited, but I haven't exited my end of the trade yet, and it rallies back and I make money. So I think in both cases, it's not a zero-sum game.
Interesting. Even coming down on the Delta One stuff, which again, we kind of debated that a little bit. I kind of thought, what if some folks are hedging with the options? I ended up coming down that isn't the lion's share of the use case, right? The predominance of them, let's say it's a stock. I buy Apple at 170, you sell it to me at 170. Stock goes up, I win, you lose. There's not a lot to that. But on the options side, we know from, just the way all these trades go up, the vast majority of them are hedged from a delta perspective, and that makes it a very different beast. I agree with you. I think there are outliers to be found in all of this. Someone even wrote in to say, well, if you're delta hedging, it's still a zero-sum game because you have to trace those deltas back, and that person is losing. They sold you the deltas. And I was like, all right, if you go out 5 degrees of separation, I suppose. It depends where you want to make the cutoff, I guess, Scott.
There's no question about that because, a lot of times there's not just one hedge, right? One hedge will beget another one, will beget another one. So you're right. There has to be a cutoff at some point. To me, if you open that can of worms at all, then to me, it's not zero-sum.
Yeah, it just goes to show, Scott, you never know what seemingly innocuous topic is going to resonate very deeply with the audience. We have epic treatises that people wrote in response to this. So a fascinating topic. I encourage you listeners to weigh in on our question of the week. It's almost exactly 50-50. If you do choose one or the other, I'm curious, add in why. This is something that was seemingly very straightforward to us and clearly has opened up a world of nuance, interest, and vitriol to some folks out there who, how dare we say, options are a zero-sum game. We love you all at the end of the day. Anyone takes the time to listen, let alone to write such epic treatises in response. We love you. We thank you all. All right, that music means we have come to the end of another epic sojourn through the world of futures options. Scott, I bet you didn't think we were going to end on our options a zero-sum game, sir.
You never know what's going to happen, right? That's the beauty of it. You never know what's coming at you. You always got to be on your toes, and I love it.
All kinds of fun stuff. If folks want to be on their toes in the land of prosper, sir, where should they go? What should they do?
You can find us at prospertrading.com. Either on the web, on our website. We've got lots of instructional videos out there on our YouTube channel. So we are out there and we will help you navigate these markets with our educators during the day while the markets are open.
He'll walk you through how to buy all those June 3s in NatGas, right? There you go.
That's right.
Load up to the upside. How can you lose? Check him out over there. Prosper Trading Academy. Maybe if you twist his arm, he'll also walk you through how to buy those NVIDIA 1 week 1500s. Because how can you lose on those, sir? You know what you can't lose, listeners? If you head on over to cmegroup.com/TWIFO, because there's no trading. It's just great free data. You can literally lose nothing except a whole bunch of your time, which is not lost. It's well spent learning about all these products and what's going on in each of them. So if you're intrigued by any of these things we're talking about here on the show, by all means, you should be checking that out. You should also be checking out the CVOL. Scott was talking about it today. It is definitely an area of renewed focus over there in the world of futures options. So some cool stuff coming down the pike for those. You can find those, of course, cmegroup.com/CVOL. We also tweet out some fun content around the CVOL for the show as well. Give you a little bit of a bite-sized taste of what's cooking in the world of vol. That is going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern. Got a feeling I'm going to be talking a little bit of UVXY tomorrow on Vol Views. Spoiler alert. Reverse split, a lot popping off there. So stay tuned for that. Should be fun. Followed immediately after that by a little bit of options oddities for all of our pro folks out there. If you want to join that partay, get access to the other 300 plus episodes we have up there waiting for you on the feed. Great giveaways, live streams for this show and everything else that we do. TheOptionsInsider.com/pro is the place to go to learn more. Then we're back again next Monday. A little bit of the old option block all the way through to next Thursday. Another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.